Alright folks, welcome to this video, and today I'll be teaching you guys a strategy that was taught to me by a friend, and according to his teaching and my testing, this can help you catch spikes. Yes, I mean it when I say it. Now, before I go into any details in this video, I just want to show you that what I have here is the moving average period 1000, and also we have the RSI period 32. These are the two basically, these are the two indicators that you're going to need to catch spikes. Now, in the process of making this video, you can see that price is crossing the moving average 1000. And if you look below here, we are still in between the oversold and overbought level. So, one of the law here is that you should not try to catch spike when the price is up here, but you should try to do that when the price is below here. Now, in simple text, when the moving average is at the top of the chart, that's a simple way, and this is the 1 minute chart. What you want to do is to look for opportunity where the price will try to retrace back to the moving average, just as we have here. So the market will be trying to go back, return to its normal position, whereby this here will be below this, and that way you can get a lot of spike in the 1 minute time frame. Now, in terms of managing risk or actually practicing, you should go with a demo account, because that's you are risk free and give you the mindset to test whatever you want to test. Now let's take a look at some spike we have here. Now, they are generally a type of spike which normally occur, and you want to go in. This is one of them here. We have one type of the spike here. When you see this small spike, it indicates a bigger spike, and you can see it here in the level. Yeah. So what you are just watching is how price reacts. If you want to take a trade now, you need to be watching your RSI and see how the price reacts to the RSI before you are going to take a position. Now, you need to measure if the price is having lower low, you should not try to trade that. But if the price is having higher lows, like we have here, this is a low, this one is higher, this one is higher, and if the price is like this, you are getting more spike out of this. But if the price is more of a down movement, like we have here, you should avoid using this strategy, because it cannot catch the spike. Once the price keep falling down, you just need to wait for price to make new highs, and as the price is making higher highs or higher lows, that is when you want to be using a strategy like this. And this strategy can be risky, because one thing about synthetic indices, it is risky for small traders. But if you can discipline yourself in time, you might be able to use this to work, because you need to understand that you need some setups before trading this strategy. You need the setup. One of the setup is what I told you: price making higher lows, one, and second, you want to see some reaction here from the low. You see the RSI is showing you there. We have a low, higher low, higher low, higher low, and you can see. So once you have a setup like this, that is the only way you are thinking of buying the boom 1000. So as I continue to test this in the rest of the boom, 500 and boom 300, and also the crash index. I will be making video about them. So your job is to stick around me and learn from the best. And also you can join us on Telegram. We offer 24-hour service for free.